On today's episode of The Market is Completely Fake, I'm going to be covering the market solved with 6 boxes and 6 trend lines. I'm going to be covering AMC, why I think AMC is squeezing next week, and showing you that everything that we've witnessed for the past 2 years on AMC is completely fake and has been nothing but the algorithm running us on a loop. And that also applies to GME, GameStop as well, and why I think GameStop will be squeezing as well. So let's start with the market. This is the macro on SPX, a monthly chart dating back to the late 1800s. I've gone over this a few times by now. Most of you have probably seen this. It's a repeating fractal, blue, green, megaphone, bull run to all-time highs, blue, green, megaphone, bull run to all-time highs, blue, green, megaphone, bull run to all-time highs. Each blue box that you see is a correction period. So you have the initial correction period here, financial panic 1873, the Great Crash or Great Depression right here, this blue box, and then the 2008 financial crisis, aka the Big Short, right here. Each blue box is more or less a correction period. The green is the break above the correction, the break above the highs from the correction period. So you have the blue, the green is a wave that breaks you above, and then you get into a megaphone where you have 3 touches on the top, 1, 2, 3, 3 touches on the bottom, 1, 2, 3, break and retest. And from every break and retest, you see all-time highs on SPX. So, all-time highs right here, another correction period, Great Depression. Play this out, break this range to the upside in the green, get this wave move, get into your megaphone. Again, 3 touches, 1, 2, 3, 1, 2, 3. Breakout, retest, bull run to all-time highs. The final correction period here, 2008 financial crisis, more or less a double bottom on the market. Break this range to the upside in the green, get into your megaphone, 1, 2, 3, 1, 2, 3, breakout, retest, and a bounce off, and now heading for all-time highs. SPX will be seeing all-time highs before it crashes. I do agree that SPX will be crashing in probably a very drastic way, but it will see all-time highs first, and the catalyst, if you will, of that market crash will be the MOS, in my opinion. One thing I want to point out, or actually 2 things I want to point out. First of all, each iteration is playing out faster and faster. And the second thing I want to point out is that fractals have been fractaling before the algorithm was even a thing. Back here, fractals are still fractaling. No algo back here. It's still doing what it's going to do. Some would argue this is natural movement here. The market is nothing more than repeating fractals over and over and over again. It's really as simple as that. Into AMC. AMC's macro, I've covered this a billion times. So we have a downtrend from 2017 until we squeeze January 2021. Right here, downtrend from 2017 until you squeeze January 2021. The equivalent of this would be the downtrend that we have from the June highs. This flag that you broke down from in November, this downtrend that you have, that would be the equivalent. At the beginning of both downtrends, you have your macro break, your macro fractal break right here, this gap down, and then you play out this sideways W pattern. Over here, the equivalent would be right here, this macro fractal break, gap down, play out the sideways W pattern, before dropping into the downtrend, where you're more or less just stair-stepping down, just laddering down. The green on both sides being more or less a W, the red more or less a cup, and the blue come down, bounce up, come all the way down, curl up, come down, bounce up, come all the way down, curl up. And then from that point, you drop to the flat portion. Covered this a million times as well. The flat portion, you have 3 touches on the bottom, 1, 2, and 3. From your third touch, you form an uptrend, which breaks you out of the macro, and a straight line into your squeeze. The equivalent of this over here, 1, 2, our third bottom, the uptrend, breakout, and now retesting, about to squeeze. So this looks very good. This is AMC's macro. I've covered this a million times. You guys by now should be familiar with this. 1, 2, 3, 4, 5, 6 takes you into the blue. Over here, same thing. 1, 2, 3, 4, 5, 6 takes you to into the blue. And then from there, you drop down to the flat portion where you have 3 touches on the bottom. From the third touch, you form an uptrend. Uptrend breaks you out of the macro, and a straight line to your squeeze from there. So the macro on AMC is perfect. Now, if you recall, last week I posted 2 update videos. Pretty much saying that off of our third bottom, we were going to form an uptrend, very slow uptrend. It was going to be very boring, would be in the $4 range. And from that $4 range, we were looking for a gap up over that range, which would be our macro break. I only made 2 update videos. I said the week is going to be boring intraday, and more likely than not, how this would play out would be we're going to gap up on Friday after hours or Monday. Friday or Monday after hours or pre-market. Gap ups don't happen intraday. Friday or Monday on court news. And what happened last Friday? Court news drops, gap up. Macro break, and everything you've seen since that has been nothing more than a retest of a macro breakout on AMC. So that was the tracking. Here was the updated tracking. This isn't updated until to current, but this was showing I was looking for this move, and we got that along with the breakout all after hours on Friday. From that, and I said this on Monday or on Sunday when I made my update video on Sunday, expect a pullback here, potentially back to the $4 range, I believe I said. From this breakout, we're going to come back down and we're going to retest the breakout, because that's how the move works. That's how the stock market works. Every time you see a breakout in the stock market, it's going to retest. So the breakout that we saw, the pullback, and the retest is where we are now. Now, let's take a look at this, and all of my tracking and the fractals aside, let's just look at this as a technical move. I almost said fundamental. Wow. All right. So this is pretty much a year of price action on AMC here. What you're seeing here is the daily chart on AMC. It's a little bit less than a year of price action. I think it's about 10 months of price action here. So you have this descending trend here, rejection here, perfect wick off, another rejection here, perfect wick off. Right here, you broke through. Pretty sure we got halted here. Makes sense. This break above right here, we got halted. Another rejection perfectly off right there. Didn't come all the way up right here, but still a rejection there. All the way down, and then on the bottom, all 3 of our bottoms, you have the support, perfect bounce there, perfect bounce there, perfect bounce there, and where the triangle meets. Now, I said last week, while I was making my update videos last week, that the support and the resistance here, and this is AMC's macro support and resistance, not a micro. It's not a micro breakout you're looking at right here. This is a macro break. I said the macro support and resistance on AMC was roughly a 60-cent range, and that we would be flat here until we found this gap up right here. I said we're looking for a gap up. It's more than likely going to be Friday or Monday on court news. That's exactly what happened. Gapped up. From the gap up, I said expect a pullback. That's exactly what happened. We have now pulled back, double bottomed perfectly on top of the previous resistance as support. Thursday closed right on top of it, and on Friday, double bottomed and closed on a hammer candle. Very, very bullish. Just from a technical standpoint, this is it's a perfect move. It's a perfect breakout, perfect retest. I'm expecting upside off of this in a very, very drastic way. Let's take a look at the volume on this move. Right, so very low volume here. As supports meeting resistance, very, very low volume. On the breakout, highest volume we've seen in I don't know how long. So very high volume on the break, and then a very low volume retest here. Double bottom perfectly on top of the previous resistance as support. And Friday, a hammer candle on the daily. Not to mention the 20 EMA is 5 cents away from crossing the 50 EMA to the upside on the daily. And if you recall me saying, the next time we see that happen, we will be squeezing or in the middle of our squeeze. So this looks very good. All fractals and patterns and tracking aside, just looking at this as a technical move, this looks beautiful. Perfect move here. High breakout, high volume breakout, low volume retest, double bottom, hammer. 20 is about to cross the 50. Looks great. No complaints. Now, I posted this on Twitter. I also posted this in Discord. What we're looking at here is the flat portion of the January 2021 cycle up top and the flat portion of the current cycle on the bottom. And you can follow the movement through. I'm not going to sit here for a half an hour and go through everything here, but you come down to your first bottom. You have 5 peaks here. All these dots, 5 peaks in increasing height. 1, 2, 3, 4, 5, right? Same thing over here. You come down to your first bottom, 5 peaks in increasing height. 1, 2, 3, 4, 5. Now, from this 5th peak here, and by the way, we played this out much faster in the current cycle, 88 days comparably to 193 days in the 2021 cycle. Now, from this, you come into your final iteration of AMC, the W with the tri-peak. So, from the fifth point here, you come down, you have this move in the yellow, which would be the equivalent to this right here. This broke slightly below the trend here. That's fine. And then you finish this move up, and then you come down below the trend to your second bottom. So you have your first bottom, your second bottom, your third bottom, comparably to your first, second, and third here. The move in the yellow bounced perfectly off the trend here. It's not that big of a deal. It's never going to be perfect, but it will be very close. So from your second bottom, you get into your tri-peak. So you find a bounce off a gap, actually, as you do here. I mentioned all the gaps are the same. They are. So you gap here. You get your first peak, your second peak, and your third peak. First peak, second peak, third peak, all above that horizontal line, same as up here. And then from the third peak, you come down one final time to your third and final bottom, as you do up here. Play this pattern out, and as we did over here, and I said, from this point where we are, where support was meeting resistance, we are expecting a gap up. That gap up will be our breakout, as we saw back here. This green flag, this gap up, and then you come down for your retest, confirm, bounce off, and straight line to your squeeze. One thing I do want to mention is that, like I just said, it's never going to be the exact same, but it will be very close. One thing I want to touch on really quick is this gap here on the open candle, the opening candle on the gap. You come down and bounce off of the previous range, pretty much perfectly. So this is the range you're in, right? You break out of this gap up and you bounce perfectly. Almost touches the wick. It doesn't fill the gap, but it comes very close. Down here, this played out slightly differently, right? We got the gap. Rather than coming down to bounce on the previous range on the open candle of the gap up, what happened was last week we got downside back to the top of the range. And we quadruple bottomed here at 452 and forming a W now. Along with the daily chart that I just showed you, the breakout and retest on increasing volume on the breakout, decreasing volume on the pullback. All you saw Thursday, Friday was AMC checking off a landmark, coming down to bounce on the top of this range here. As you saw it here, the only difference is it happened on the opening gap candle. Here instead, we ripped and then came down and now forming support there. But nonetheless, this movement here is perfect. Not to mention, the final iteration in the 2021 cycle, from the beginning of this until your breakout, 143 days, until the breakout finishes playing out. On the bottom, from the beginning of this until the breakout, 150 days. So this is pretty much tracking 1-to-1. With that being said, once the breakout confirms, you find another gap up, and this is what I'm looking for next, is another gap up to the next range higher. And that gap up until your peak of your squeeze was 2 days. So 143 days to play this out until your breakout retests, and down here 150 days. So pretty much 1-to-1. From the confirmation of the retest, you gap up, and it's 2 days until peak. I believe we're squeezing next week, or at least starting the squeeze next week. I'm expecting a gap up early in the week, more than likely Monday. So this looks very good. I could show this again with the flags, the daily gaps that I always show. With the flags are now here as well, and they're all in the same spot. Your first bottom here, you get the gap. I'm not going to go through all of this. You can pause the video and look for yourself. There's even more gaps that I didn't label, just because if I start putting flags everywhere, like there's a gap right here, like you see it right here. If I start just putting flags all over the place, it's going to just be cluttered. You're not going to be able to see shit or what's going on. But all the gaps are the same. And again, from your third bottom, you got the final gap down. That took you to your third bottom, as we did here. You play out this pattern here, as you did. And then I said we'd be looking for this blue flag here, this gap up and the retest. And that is exactly what we got here now, is the gap up and the retest. The next thing we're looking for is another gap. and it's going to be higher than this. So that is what I'm looking for next. I'm expecting that to be happening early next week, more than likely Monday. So that is that. Zooming in on this on the daily. Here are the gaps in the daily from your first bottom. 3 gaps up as you have them here, 2 gaps right here, 3 gaps down, or sorry, 2 gaps down, and then this one's a gap up into the tri-peak. So 2 gaps down, 1, 2, and this one's a gap up into the tri-peak. From the third peak of the tri-peak, you have 1 final gap down to your third bottom, as we do here. Off of your third bottom, you find a bounce. You're fighting for the 20 EMA. Over here, same thing. Same exact thing. You find a bounce, fighting for the 20 EMA. Before gapping up here, this is your breakout. So you gap up, you come down for your test, confirm your test, straight line to your squeeze. This is the next gap we're looking for, this yellow flag. So here is the blue gap we were looking for. Came down for the test, confirmed the test, now looking for this gap up here, which should be taking us a straight line into our squeeze. Now, the daily EMAs. I've covered this multiple times as well, where the daily EMAs of this move, the flat pattern on AMC, are the same. The next time, I've said this for the past 2 weeks, I think, the next time the 20 EMA crosses the 50 EMA to the upside, we will be squeezing or in the middle of our squeeze. Well, guess what? The 20 EMA is 5 cents away from crossing the 50 EMA to the upside. Not only that, this is your macro break and retest on AMC. So this looks very good. Again, 20 EMA in the white, 50 EMA in the green. 20 is under the 50 the whole time here. You get this wave move, you cross it, come back underneath and cross it higher. Over here, same thing. Come back and then cross it higher right here. And then you cross the 50 back to the downside, as you do here. You cross it in the tri-peak, as you do here. And then back underneath one final time, where you find that bounce off your third bottom. You're fighting for the 20 here, as we did. Our third bottom fighting for the 20 EMA. Before getting this gap up here, as we did, and then come back down and retest the move. So this looks very good, guys. I'm expecting a gap up to the next range higher, which should be taking us a straight line into our squeeze, and I'm expecting that gap up to be happening Monday. And on top of that, the 20 EMA will be crossing the 50 EMA to the upside, and we will be checking off the last gap up that we're looking for, which should be taking us a straight line into our squeeze. So that is that. Here's the RSI. I updated the RSI as well, and the RSI is perfect. Now, again, on the left, the flat portion of the 2021 cycle, and on the right, the flat portion of the current cycle. The EMA, not the EMA, sorry, the RSI is underneath on both sides. I'm not going to go crazy through this, but the RSI is the same. So in the yellow box in the 2021 cycle, you have your first break below, and you have 1, 2 breaks above. Over here, first break below, 1, 2 breaks above. The purple, you get your second break below, third break above. Over here, second break below, third break above. The red, you get your third break below on both sides into the green. Actually, from there, you bounce up, and then you come down, break below, right at the start of the green. That would have been the equivalent of your second bottom. Right here, same thing. You bounce up, come down, break below at the beginning of the green, which equates to the second bottom right here. From the second bottom, you get into your tri-peak, where you have your fourth and fifth pops through, overbought, as you see it right here. And then into the blue, you get your fifth and final break below, oversold on both sides. You bounce up, pull back here in this W, which would have been the equivalent of this move right here. And over here, the bounce up, and then you come down, form this W, again, the equivalent of this move right here. And then your sixth break above, overbought on both sides, lines up perfectly with this move right here, the breakout on AMC. And then the pullback for the retest, RSI dips back through overbought, as we did, and that's where it is now. So the next move that we should be getting, again, should be a gap up, and RSI obviously is going to blast off on that gap up, and that's what we want. And that's pretty much it. The RSI is the same, the daily gaps are the same, EMAs are the same. One other thing I want to touch on before I move on from AMC is the symmetry. So the final iteration of AMC, once again, this W here with the tri-peak that led up to the squeeze January 2021, was a perfectly symmetrical move. So it's a W, your left leg of your W, your right leg of your W. Your tri-peak here is the middle of the move. So from the left leg, bounce, come down and up, and from the right leg, bounce, come down and up. On the right on the right leg of the W, obviously the right side of this is your squeeze. This is your breakout and retest, but still symmetrically equivalent. So over here on this side, your second and third bottom. This is your W, right? So your second, your tri-peak is the middle of the move, and your right leg right here. And I had this rectangle here saying I was looking for this move right here. The symmetrical equivalent would be bounce up, come down for the retest, and then a straight line into your squeeze. This updated now. There you have it. So this move right here would be the equivalent of this, and now has come down as you saw back here. Very symmetrical move for the retest. From here, we should be finding some crazy upside. I'm assuming we're going to be gapping up on Monday. Who knows if Zern is going to sign the paper? It's probably signed. I mean, anyone who's in my live stream, this whole play is scripted. All of it. Everything you're seeing in the news, everything that Adam Aaron says, I would not doubt he's talking to the Fed regularly. I wouldn't doubt that at all. This whole play is scripted. GameStop as well. Now, why do I think we're squeezing next week? Well, I showed you all of my TA and where we would be on the macro, where we had just broken out, and we broke out, we retested. This is where we are, right? We're looking for a gap up, and this gap up was 2 days until peak, right? So, again, another thing here would be the daily gaps. We're looking for this yellow flag here. Again, 1, 2, 3 candles until your peak. So, OPEX dates, once again. I'm not going to go crazy with this, but both squeezing on AMC, January and June, landed 7 trading days post OPEX date. So you have OPEX January 15th, seven trading days later, January 27th, and over here May 21st, OPEX, 7 trading days later, June 2nd. Both squeezes on AMC landed 7 trading days post OPEX. Make with that what you will. I don't think that's a coincidence. I think the odds of something like that happening, where both of your peaks landed 7 trading days post OPEX, those odds are out of this world. Genuinely, they are. Another thing that looks good for us is that OPEX was July 21st. 7 trading days post OPEX is August 1st. 2 more trading days, Monday and then Tuesday. Just saying. So that's pretty much it for AMC. It looks great. Breakout on increasing volume, pullback to retest on decreasing volume, the tracking, the EMAs, the gaps, the RSI, it's all the same. The move is perfectly symmetrical. AMC and GameStop are the same stock. Covered this multiple times as well. Both squeeze in January, both squeeze in June, and then the line is GameStop, and the candles underneath are AMC, tracking perfectly. One thing I find interesting is GME's 4-1 and AMC APE happened pretty much at the same time, pretty much at the start of the final iteration here. So that's interesting. Pretty much happened at the exact same time. And once again, AMC here curling to the upside. Finally got the breakout, now retesting. GameStop is curling to the upside as well, and will be squeezing very soon. I'm not going to go too crazy into GameStop, but as far as my... I don't really track GameStop, I'm not going to lie. I'm not going to pretend like I do. But I threw together this macro, and this looks very good. Where right now, GameStop would be trying to break this triangle, as you saw back here. From the break, you find a gap up and a retest, as we saw at AMC. And then from there, just a straight line to your squeeze. So that's pretty much it. GameStop looks perfect as well. And that's pretty much it for the video. I will be live next week. I'll be live Monday. That's pretty much it for the video. I don't know what else to say besides it looks amazing. How people freak out when they see red. It's market psychology 101. People see red and their brains just fucking, they have an aneurysm. But, looking at this as a technical move, looking at the tracking, the gaps, the EMAs, everything looks perfect. I'm expecting mayhem next week. And that is pretty much it for the video, guys. So I'll catch you on Monday. I'll be live. And that's it.